Hello, everybody, and welcome to the Cyclical Investors Club YouTube channel. My name's Corey Kramer. Today, we're going to be taking a look at FMC Corp. I've had a lot of requests for this one in the past 24 hours after the 30% plus decline. As always, this is not individual investing advice. This is just how I analyze stocks. So, little history of FMC. First, in 2023, I made a video where I warned people about some of the dangers with the stock. That was after it had already fallen down here. It was some point, I think, in 2023, actually. So it was probably right after this initial fall toward the end of 2023 when, if you looked at it, you might think it looked a little juicy there. So I had owned FMC Corp when I first developed my deep cyclical strategy. I did write about it, I think, even on Seeking Alpha back in early 2016 during this decline, and I got a double on it within like 2 years. So I had owned it in the past. I was watching it in the Cyclical Investors Club. So one thing that helps is to track a lot of stocks. I mean, one of the main things I do is just keep tabs on like 700 stocks and what their valuations look like, what the quality, what factors maybe they're not, meeting. So FMC was on the list and it was getting close to the buy price. And usually when that happens, then you start scrutinizing it a little bit more before you actually buy it. And one of the members in the Cyclical Investors Club pointed out a short report that was out on it. I took a read of that. I talked about this in the previous video, and I thought it sounded, for a short report, pretty reasonable. And so those risks were just too much. Combined with, you can kind of see here, there was this really giant upcycle, and then it already started kind of coming down. So there's a bunch of lessons here. I'm going to pull up some of the reasons people might have bought the stock, and I'll just kind of go through those because that helps me organize my thoughts a lot better when I can just respond to kind of mistakes that people have made. And I make, mistakes like buying this a couple years ago or 2023 or whenever. I've had stocks where I did buy and didn't avoid it and try to learn my lessons. So the main thing is, like with a deep cyclical strategy like I have, what you're really counting on is historical cycles kind of roughly repeating. And so you always have to ask yourself right before you buy. Now, I don't do all this research ahead of time, but once the price looks good, then I start looking more closely at it. And one of the things I want to know is there anything that's really different this time that, could impede a recovery in the stock price? So that's what I was asking myself back here. If there was something really, truly different this time, or that would make it more difficult for the stock price to recover. And so that's what that video was about. I'm glad that short report was pointed out to me because it gave me like the bear thesis basically. And then I was able to judge for myself whether that makes sense. Now, just because there's a short report, I buy stocks that have short reports on them all the time because a lot of times the short reports are dumb. So you have to, just have a clear mind and don't get too excited about it's going to be such a great deal that you don't take the other side of the thesis seriously. So what I want to do is look at some of the reasoning here. I used Chat GPT for this, and I just asked what were the reasons that investors and analysts gave for buying FMC from 2022 through 2024. So this would have been the year right before the decline, and then the year during the decline, and then the year this past year where it didn't really go too far until just now. So the first one is an anticipated recovery from the 2023 downturn. So if I would have bought this in 2023, that would have been my number one reason for buying it, which is the same reason I bought it in 2016, early 2016 or late 2015, is you anticipate that this is, like an agriculture cycle or something like that. And eventually business will pick back up. But I decided that there were reasons why that it might not happen. So I can understand why why that would be the number one reason. The number two reason is confidence in long-term growth prospects. For a deep cyclical business, that's usually not the reason that I would initially buy a stock. Let's put it this way. A person could have given that reasoning, okay, back in 2022, right? They could have given that reasoning when the PE was 19 and earnings were growing and had grown a lot, especially since, if you just draw a straight line from back here all the way up to there, they had this little dip in earnings, but you could make a case about the long-term growth prospects. Now, the mistake there was this is a cyclical business. So if you understand that, then it's basically a commodity business with some patent protection, I guess, is maybe the way to think about it, which was, in understanding that helped understand kind of the short report a little bit more too. So without these patent protections, it's just a commodity business, right? And those are cyclical businesses. So that means that maybe this 5-year period was more of an anomaly than a long-term earnings growth trajectory. And that's kind of, how a person would have to think of it. So on one hand, it's kind of understandable, but no, you want to know the cyclicality of the business in order to do that. So, and that goes into number 3, attractive valuation amid the share price decline. I don't do valuations for cyclical businesses. So you really have to make the case that this business, the cyclicality was going to be over. And I never pretty much do that. Sometimes I will acknowledge that there can be secular growth in cycles as well. So that's a little bit different argument. That's what I would make for some semiconductor stocks, but not for, a chemical agriculture company, right? So the attractive valuation, I don't think that ever really should have been paid too much attention to, because you shouldn't be doing earnings valuations on deeply cyclical businesses. We'd have to make a 2-step process. You would have to kind of really make this case that number 2 is of the confidence in the long-term growth prospects, and then the next step would be the valuation, right? But no. So positive analyst ratings and forecast. Again, if it's a cyclical business, don't pay any attention to analysts. They're not reliable. We'll just put it that way. What is the bullet point here? So analysts maintained a consensus hold rating on FMC, with several issuing buy and strong buy recommendations reflecting confidence in the company's future prospects. Okay, so this is why I'm using AI for this, because if I write articles, and usually it's when I write articles less than when I make videos, but sometimes I'll write articles where I point out these things of the mistakes people made, and then they tell me, well, that's not why I did it. And then or nobody bought the stock for those reasons, right? And so this is a good way for me to say, okay, well, according to AI, I went out and searched the internet, and these are kind of the average reasons. So analysts were just wrong. I use them to look at what the expectations are for earnings about 1 year out into the future. When I'm doing valuations for earnings, but not for deep cyclicals. So getting that cyclical, not cyclical, moderately cyclical kind of framework ahead of time is going to help a lot in picking kind of what to pay attention to and what not to. Because if earnings can fall, let's say that we'll just say this is a deep cyclical and there's nothing structurally wrong other than they're going to be cyclical now than they have been the past 5 years. If that's the case, then and earnings fell by like 50%. I'm just glancing at it. Okay, well, that's normal then. And the problem is I don't know what the recovery is going to look like, right? But a cyclical business can have earnings fall 50 or 60 or 70%, and that's normal as long as they come back. Otherwise, they're just a bad company. They're not cyclical. There's no cycle. It's just down, right? And so I think this one's just a little too tricky to know what the potential, one, where it's going to bottom, right? And two, what the potential upside would be. Now, there could be very smart people out there who eventually figure that out, and they figure out at the right time the stock price eventually bottoms. But that's not how I do it. I rely on historical cycles. So I just admit when one's like too hard. Like I would just put this kind of in the too hard category. And I think I did look, and they had some debt too. That amplifies the risks. So if you're wrong, then you're wrong even worse. You can't just kind of hold through it as easily. So there's a lot of other kind of small things that layer on top, but those are the type of things that I think about. And then number 5, strategic divestitures. Yeah. These can boost. It's not that they never work, but in generally, if the business is so good, why are they selling out parts of their business, right? And I understand that occasionally that can work over time, and the remaining business can be stronger, and maybe if they get a good price for what they're getting rid of. It's not that it can't work, but it's generally not like a good sign, right? How many businesses has Berkshire sold that are worth much, right? I mean, the last one I remember them selling was like their newspapers, or were like nothing basically. So, and, because if you can hold, they're just not, by the time you want to get rid of them, most of the time, they just aren't, they don't worth very much. So, but I recognize that business can become leaner and function better, and when they're more focused and all that, yada, yada, yada. I'm not saying that can't happen, but it's not a reason I would buy a stock, right? Okay, so Corey, what do we do now? For me, I mean, I don't know what's going to happen. So this just goes in the too hard category, and I just forget about it. Like I don't even know if I still track it. I do actually, because someone saw my note in there from before. From back in a year ago or so. It's not showing the total enterprise value here. Show the long-term debt, 38%. So yeah, that doesn't mean it couldn't bounce. I mean, but here's the problem. You need to have confidence in your thesis, because what do you do when you think this is the bottom, you put a bunch of money in, and then it goes nowhere like it did for the past year, and then they release another earnings report and it drops another 40% overnight? What are you going to do then, right? You're going to react to that price movement, and probably regardless of what the earnings are really doing or what the next 5 years, and you're going to sell. And so now you lost a year of time, or however many it happens to be, and 30 or 40%. And there was never like really a truly fundamental thing that a person could like hang on to. They're just betting that the stock price will go higher. And eventually probably their earnings will bottom, and probably they'll start to go up again. That would kind of be my base case. But I don't know when they're going to bottom. I don't know when they're going to go up again. And I don't know how low the stock price is going to go before that happens. So whereas before, I could use historical cycles to, if I looked back in time, I could tell, if I'm going from memory, but I think they fell 50% here. Yeah. So like 50 to 60%. And I could say, okay, if I went back and I looked at previous cycles, I could probably see that same pattern. I'm going from memory from 10 years ago, or 9 years ago. Maybe they fell the same during this downturn, 60%. Right? So we're right on target. And I say, okay, well, in the past, the market has treated this stock price pretty cyclically. And this was a time period where the market wasn't really down. The industrial part of the market was down, but the overall market wasn't down very much. It wasn't down 55%. And you say, okay, this could be an opportunity where if things just revert to normal, I could make 100% in a few years, which is what happened. I don't feel as confident that this is the same situation, right? And some of that's just judgments like I talked about, but there's no, like, it feels like I think there should be a bottom, right? That's what it feels like as an investor when you look at this. It doesn't have to be. I mean, companies disappear, shrink slowly over time, and disappear all the time. So just because it's down 30% doesn't mean, in a year it couldn't be down another 30. I think it's really unknown right now. So as much as I want to buy things, I'm not buying this one. And that doesn't mean that you couldn't make 100%. I mean, it was just was it trading at 70? Yeah, it was almost at 70 last year. That's almost a double from here. So if they get a positive surprise over the next year or so, and a person could do it. I just don't have the confidence that it's going to happen. Okay, I do have weekly picks every week over on Patreon, though, at the $25 tier per month level. And they've been doing pretty good. And even when I don't find anything in the market that I think is an absolute steal, I find something every week to buy. So if it's the second best, then it's the second best. And those have been doing pretty good. So definitely check out those links down in the description. And I also have a 25% off affiliate link for Fast Graphs down there. So you can look at this graph, just like I'm looking at here, and get an idea for what some of these stocks have done in the past. A lot of times, I mean, FMC's history is pretty decent. I mean, if you just take a random stock somebody's talking about on the internet and you put it in here, usually within like 5 seconds, you can be like, okay, they haven't made any money for however many years, or, and so you can rule out a lot of stocks really quickly using Fast Graphs. And you can get some basic valuation stuff. And if it's not a super cyclical business, or, you can look at earnings projections and things like that. All right, I think that's all. And I will see everybody later.